Hey guys, Brian Schroeder here with Faster House. I want to tell you, continue with making more money on your rehabs. This is a little video series I'm doing because I want you to make more money on the houses that you buy, rehab, and resell. So, part 2 here, which is be aware of the cost of your money. How much that financing is costing you, because it can surprise you and it can sneak up on you. So I want to just talk about it here real quick. In this example, I'm going to show you some numbers, but in this example, we're talking about a house that you buy for $90,000 and you spend $30,000 rehabbing it. So in total, you got $120,000 into this house, give or take. And I'm going to assume you're financing the whole thing. Also, I'm going to assume that the length of the loan from the day you buy it, close on it, buying it, all the way till the day you sell it, the day at closing that you sell the house, that time is exactly 6 months. And I think that's fairly standard. Some people get it done faster, especially if the market's really hot. Sometimes it takes a little longer, but 6 months is fairly standard. So we're going to talk about the different options for financing your deal. The options really quickly are pay cash, take out a home equity line on your house if you have your house free and clear or paid down significantly, borrow from a local bank, use a private lender, and when I say private lender, I'm talking friends and family type private lender or hard money loan. So real quick, if you're paying cash for that house, that means you've saved up, you have 120 grand sitting in your checking account that you can just write a check to purchase and pay for the rehab while you're going. If you can do that, it doesn't cost you anything for your financing, so you are so far ahead of your competition, it's incredible. Now, the downside to that is that $120,000 that you have in this deal is there's an opportunity cost because you don't have it working for you somewhere else, as in the stock market or wherever. So just beware, throw that out there. But anyway, if you can do that, you're way ahead of everybody else, way ahead of your competition. And it's a super competitive market today. That's why I'm talking about this. Second option is home equity line of credit. So if you have your house, your personal residence paid off, or you have significant equity in it, where you can get a home equity line of credit from one of the major banks like Wells Fargo or Chase or whatever, it's a great thing because they're typically going to charge you somewhere around 4%. I haven't looked at the rates of the day here recently, but somewhere around 4%, and you won't have to pay any points on that. When you go to closing, you just simply write a check off your home equity line, turn that into a cashier's check, go to the closing, you own the darn house. Then they start paying interest at that point. So assuming you finance the whole $120,000 with your line of credit at 4%, it's going to cost you about $2,400 to own that for 6 months. So super cheap. Next option is a local bank. First of all, I'll tell you, the big banks, they don't want to do anything to do with local fix and flip or rehab type loans. So short-term loans, buy a house, rehab it, resell it. The big banks like the Bank of America's, the Wells Fargo's, the Chase, they don't want to have anything to do with it. So don't even go talk to them about it. There's local banks here in the St. Louis area that do that kind of financing, but there's a lot of banks here in the St. Louis area. Some do it, some don't. So what I encourage you to do if you're looking for this kind of financing is go into local bank and go to the senior commercial lender and say, hey, I'm a rehabber. I buy houses, rehab them, resell them. Do you guys do that kind of financing? If they say no, just turn around and walk out, go down the street to the next bank and ask them. There are banks here in the area that'll do it, so as soon as you get a yes, then just talk through your scenario. Typically what I'm finding right now these days is local banks are going to charge around 6% interest only for that type of financing, and they're going to charge you about 1 point to make that deal happen. So if you were able to finance that whole $120,000 for 6 months, that would cost you $4,800, which is pretty darn cheap. That's a good way to do it. I will tell you though, unless you got a lot of experience or know somebody very well, you're probably not going to be able to get 100% financing on that deal. You're probably going to have to put some money down on a down payment. You're probably going to have to either pay for that rehab entirely yourself, or they might pay for a portion of it, but you probably have to pay for a portion of it. So that is an option. It's a great option if you can do it that way. Private lender. So when I say private lender, I'm talking friends and family money. Like borrowing your money from your mom, your grandma, your sister, whoever. Typically what I'm seeing is private lender, friends and family money is somewhere between 8% to 12%, interest only, no points. That's what I'm seeing these days. So what does that cost you? At 8% it costs you $4,800. Same as the local bank. It's a higher interest rate, but you're not paying points. At 12% it's costing you $7,200. And obviously in between, it could be anywhere in between there. If you do use private lenders, friends and family type private lenders, I definitely encourage you to do your paperwork. Have a promissory note on the house, a deed of trust on the house, have everything done set up right. Thanksgiving still is good because you get together and there's no family issues. So if you need any help with that, there's tons of information on the internet about putting together loans, private lender loans. Hard money. So hard money, typical rates that I see right now are 12% interest only with 3 points. Typically you can either finance that 3 points in or pay it on the back end. If the rates are higher than that, shop around because I know there's people charging more than that, but you can get it at 12% and 3 points these days. Don't pay more than that. And watch out for junk fees. Hard money lenders quite often throw in little nickel and dime junk fees, so watch out for them. Typically you're going to have a doc prep fee, so don't be surprised about that. Some hard money lenders charge an appraisal, not all, but some do. Any fees outside of that, you shouldn't have to pay, so just watch for those things. But anyway, in this example, at 12% 3 points, you're going to be paying $10,800 if you finance the whole darn thing. The good thing about hard money lenders, if you bought it right and you know what you're doing, they will very possibly lend you the entire purchase price and the entire rehab if you want it. But I tell you, one way to save money, because that is a lot of money on your rehab, that significantly cuts into your profits. And if that's your only option, it's your only option. But if you have the option of putting some cash down, so instead of borrowing 120, maybe you borrow the purchase, but you pay cash for the rehab, or use your line of credit for that rehab, something along those lines can reduce this amount of money you've got that you're spending on the hard money loan. So just some ideas for you to think about. I wanted to just raise awareness of how much that financing costs you on your rehabs so you can make more money. I hope this helped.